All right, what's up? What's up? It's your boy CoreyB. I want to get into this today. I want to talk about just the different types of investing and how you approach them differently, okay? So, there's different forms and places and ways, and I've talked about a lot of them throughout the course of the different posts that I've made and on my platform, on Instagram, Twitter, TikTok, things like that. And here on my channel, I've talked about a lot of the different ways. I've always been a big advocate for the stock market. I love the stock market. It's something I know, it's something I understand, it's something I've followed and I've dabbled in for, several years now. It's something that just makes sense to me. I understand how it works. I understand the dynamics. So I've talked about it a lot. I've talked about what's happening in the stock market. I've talked about, how you can get involved in the stock market and things like that. What I want to dive into more right now is just understanding the difference in the different kinds of markets. Because I've also talked about Forex. I've talked about crypto. I've talked about these different things. Okay, so now there's a huge difference between being an investor and being a trader. Okay, so a trader, and see, some people, they talk about day trading. That's a whole different, it's a different beast of its own, okay? So the idea is when you're looking at investing, you're putting your money into something to see a long-term gain. Now, that long-term could be months. That long-term could be years. That long-term, it really depends. And the cool thing about something like the stock market is, which something that I tend to look for, is when you're looking at different companies that have dividends. Okay, when they pay out dividends, this is a cool company to think about, because it's something that you're like, okay, look, I'm putting this much money in. You're putting X amount of dollars in, right? You're buying so much percentage of those stocks, whether those portions of a stock or you're buying so many shares, things like that. And when you're doing that, you're gonna know, you're depending on and counting on, of course, that money growing. You're depending on the value of said shares going up. Hope it goes up. I hope if you've done your, due diligence and research properly and, found the right companies to invest in, that ultimately those shares go up in value. Now, while those shares are going up in value, regardless of whether they do go up in value or not, a company that pays dividends is going to keep paying you. And that's cool. It depends on how much, and of course, it depends on how much you've got into a company. A lot of companies, you're going to need a minimum of $500 to really see some good dividends. Some companies, you're going to need $2,000 to see some good dividends. So really, again, like I said, you got to know what you're buying into. You got to know the company that you're buying into. You've got to know what kind of shares, what kind of stock you're buying. Then you've got to understand, more about how the payout works. Okay, are they going to pay out dividends quarterly? They're going to pay it out annually? These are different things to consider. But again, what you're looking at is long-term gains. You're looking at gains over a period of time, not over instant. Like, you're not looking for an instant return. Now, a trader, there's different kinds of traders ultimately. But when you're trading, ultimately, you're holding something just for a moment. Just for a moment, you're buying into it and you're trading against something else. When you're doing Forex is going to be currency. You're looking at foreign exchange. So you're looking at things like, the US dollar versus the yen, or the yen versus the Aussie, things like that. You're looking at the different currencies across the world, and what you're doing is you're trading, and you're trading it. So you're trading this for that, and you're trading that for this. And you go back and forth based on what their values are at the time. It's a whole different thing. Now, so as much as I've encouraged people, hey, look, go out, get educated, learn how to do these things, you have to understand what you're getting involved in. These are completely different avenues. I have a partner who's been an avid Forex trader for 20 plus years now. He's incredible. He's on a different level. He sees things that I'm still learning. So he sees things that I'll be looking at the charts, I'll be looking at the graphs, and I'll be like, look at this pivot here, look at this reversal there. And he's like, wait, are you seeing what I'm seeing? Because I can show you something else. Like, he sees things, and he sees things, like I said, because he's been doing this for 20 plus years. he knows and understands what he's looking at on a level that is different than most. The people who get into Forex and stuff like that, people who get into trading, swing trading, things like that, it's like a 7 to 8 percentile of success rate. It really is. It's a small percentage of people who are actually successful. So when it comes to things like that, you've got to really hone your craft. You've got to really take the time to learn the charts, the trends, the currency, the way the mathematics and the psychology behind those curves goes, how it works and how it operates, and what you're really looking at. It's something that, like I said, my partner, he's been doing this for 20 plus years, and he's still learning constantly. He says he never stops learning. He always breaks out these old books and things, the Master Swing Trader and Japanese candlesticks and things like that. He breaks out these old books. He's read them multiple times, but he breaks them out from time to time because he's got to, sharpen those skills again. Like, hey, what did I used to see? What did I used to use? What skills have I steered clear of? What things have I adapted more? Like, it's something that is a constant learning experience. Warren Buffett, the Oracle of Omaha, the greatest trader of all time, arguably. Some people disagree, but arguably the greatest trader of all time. Like, he said it several times. The reason he's so successful at investing in the stock market is because he never stops learning. He reads a new book. He reads a book on a weekly basis. Now, there may be books. I remember there was another guy, Dan Locke. He talked about this. He talked about this in one of his seminars once, and he talked about it. He's like, look, even to someone who's writing books, even to someone who's giving seminars, even the one who's teaching the classes shouldn't stop learning, because there's something maybe you haven't learned yet. There's always going to be somebody who has a skill that you don't have. And when he talked about the way he reads books differently now that he's published so many books, right? Because he's published all these books and he teaches all these classes. So it's like when he picks up a book now, he picks up a finance book or an investing book or something like that, and he starts reading through it, and he's like, okay, I can kind of skim over this part, and oh, this part I can skim over, and oh, okay, this part I can skim over. But there's other parts that he's like, wait a second, something catches his eye, and he's like, I gotta reread this again, because there's something that he didn't quite know, or an approach that he hadn't had before, or maybe a perspective that he didn't look at it before. It's like, the reality is there's always gonna be something that somebody can do better, or that somebody sees that you don't see. There's a reason that even the greatest of investors have lost at times. There's a reason that the greatest traders take losses, but they also take more wins than they take losses. The reason is because they never stop honing their skills. They never stop sharpening that skill set. They never stop working and building their craft. It is a craft. It is a skill. It is not gambling. See, that's the thing, is too many people, they don't know what it is. They don't understand what investing is all about. So what they do is, I commend most who don't dabble in Forex. They're like, I'm not going to get into that. I don't know what the hell that is. Good for you. If you don't know what it is, don't get into it. Now, if you want to learn what it is, absolutely, there are great people out there who can teach you. But if you don't know what it is, absolutely don't dive in. Stay tuned. I'll be talking about it more in some of my other videos, and I'll dive into more details of what it is, how you can do it, and things you can learn from the process. Because I think it's a skill set that absolutely, if we could teach more people how to do these things, then more people can build a better life for themselves. But Forex is a little bit more of a, tricky, so to speak. But see, that's for me. For me, like I said, I've learned, and I'm still learning how to, read those charts and how to see the mathematics and see the psychology and why the curve, why the bell is sitting this way, why the bell's sitting that way, what is happening in the market that changed that bell. Because that's all it is. It's completely objective. It's you go into Forex, which is totally different from the stock market. Is you go in with no opinions, no feelings, no emotions, nothing. It's math and psychology. It's like, look, let me read the chart. Let me understand the graph. Let me see why the bell is curving the way it is. And let me see if I can predict what's going to happen next based on the trends that I've seen already happen. And that seems weird. It's like, well, if you're predicting how reliable it is, if you start studying the way curves work and the way trend is a pattern. It's something that you see happening, then you wait to see something replicate. You wait to see something to alter. You see a change in momentum. You see a change in structure. And then you can predict the optimum moment. This, of course, with any investment, there's that golden, opportune, like, spot that is like, that would be the best possible spot. But you might not get that best possible spot. And with trading, the cool thing is with trading, you don't always have to have that most opportune moment. You don't have to have that optimum spot. You don't have to have that perfect, the golden ticket. You don't have to have that. What you just got to do is see those trends. Because if you see those trends, even if you don't catch it in that spot, you can make money in another spot. You can make money on both sides of the curve if you know how to get in on it. Okay, so like I said, I'm putting a lot out there and I'm throwing a lot at you, and it's a lot to take in, and it's really hard to understand. But that's what I want you to understand, is that that's why Forex is something that you shouldn't dabble in without being willing to put in a lot of time into research and study. Now, when it comes to the stock market, the thing that makes the stock market so much different is stock market is easy to get into. When it comes to Forex, you need like a broker or a hedge fund. You need a avenue, a platform, right? Something that's, you need a facilitator to get there, right? Okay, otherwise you're investing so much more of your own money. It's tricky. Like I said, there's a lot that goes in. Now with the stock market, you can get in with small, tiny pieces of money. This is much more for your casual, and I say that word so loosely, but there are casual investors. There are people who's like, well, I'm just trying to make sure that what, little extra money I got in the bank, what little money I got after my, after I paid my taxes, after I paid my bills, I paid my light bill, paid my rent, I got a little bit extra. They don't really want to take trading seriously, but they do feel like they had a little extra in the bank this month and they want to do something with it. Okay. Now, I never shame people for their finances, for how they handle their finances. I absolutely encourage people, you should start young. Unfortunately, most people don't start young. It's just where our society works. We get in a momentum, we have these perceptions in our society that we've got these standards that we got to live up to. We got to have this phone. We got to have these shoes. We got to have that car. We got to have all these things. And you're at a young age where you're not making money yet. And, I just started making a little bit of money. And before I know it, I'm already spending it before I figured out what to do with it. And I didn't even have bills yet. That's where most of us start out as teenagers. We're making money and we don't even have bills yet. And instead of starting to make and develop those strong financial habits, most of us don't. It's unfortunate. So I'm speaking to the ones who can start early. Absolutely do so. Start making good habits early. Start making, good habits of taking a portion of your money, investing it. Take a portion of your money, save it. Say, like, I'm a teenager. I'm getting, this is my check. I take 25%. That's savings. I'm going to take 25% right here. That's investing. I'm a Christian, and I absolutely encourage you to take 10% off the top for tithe. But those of you who are not, like I said, again, I don't shame anybody for their finances. Even Dave Ramsey teaches the idea that, yes, he knows, he's a strong Christian, and he teaches that, yes, I know that you're supposed to tithe 10%, but if 10% is going to put your family out of your house, absolutely don't tithe 10%. Do what you have to do to survive. God will understand where you're at. Dave Ramsey's talked about this many times. Many Christians would say that's the wrong perspective. Again, I'm not here to judge. What I'm here to do is to help advise you to take that next step to the next level. So for the mass majority of us who did not start when we were young, who did not start their first stock trade when they were 11, like Warren Buffett, thankfully, I've already instilled this in my boys, Corey and Colton, in January. In January, turned 8 and 9. They made their first stock investment last year at the age of 7 and 8. They invested in their first stock. They're still eager to invest in their second one. We've been talking about it lately, and they've been, just trying to figure out what they want to do and how they want to build for their future. They're 8 and 9, but Corey, my 8-year-old, I mean, he's 9 now, but since he's been 8, he's like, when I turn 9, since like last summer, he's been like, last fall, he's like, when I turn 9, he's like, I'm gonna have my business planned out, and I want to start my business. He's already got things working. He's already got things moving, and he's trying to build for his future and trying to get some financial stability and some independence for himself. So I encourage everybody to start as young as possible. But with that being said, most of us don't. So where do we go if we didn't start then? So for those of us who didn't start young, those of us who didn't have that prep time, right now you can start investing in stock with so little. You don't need a huge bankroll. You don't need like X amount of dollars in order to, like, with something like Forex, you're not going to get started for $5. It doesn't work. It absolutely doesn't work. Even when you're talking about investing in crypto is a totally different thing. Now you can swing trade or you can invest in crypto through Forex plans, but ultimately when you can invest in crypto just on its own. Crypto's pretty versatile right now. It's because they're still getting things worked out. Yeah, so weird. Been around for a decade and still working things out. Promise you, it's gonna be a minute. They're still getting that figured out. When they do, it's gonna be truly viable. But in the meantime, it is volatile. And so with that volatility, it's hard to know how to invest in it. It's hard to know, especially with someone who's not a skilled or experienced level investor, to say, I'm gonna put money in crypto and then I just don't know what's gonna happen to it. Now, lots of people do. Lots of people, get on their Coinbase. Some people even did it through Robinhood. There's different little apps and platforms that you can download on your phone and you can get started. But like I said, there's a big risk that you're taking because you don't know a lot about it. Now, so I advise you, look into it. Start reading up on it. Read up on crypto. Read up on what it is that crypto actually is. Read up on, how it is you're going to make your money. Understand that it comes from the consumer. Same as the stock market, except it's more volatile because it doesn't have a lot of structure behind it. Now with the stock market, companies have structure. Companies have been around for a long time. Most companies have been around for a long time before they ever went public and where you could publicly trade them. So you could see things about a stock. You could see things about a company when you're looking at their stock that you could say, okay, well, this company's been around 80 years. They've been publicly traded for 10. Okay. Well, when they first went public, one share was $4.32. Okay, they were $4.32. Where are they today? Today, they're $17.32. Well, they've gained only $13 in 10 years. What does that mean? What does that mean? So you can look at the company. You can look at the curve and see where it peaked, where it rose, where it fell. You can see all those different things. You can read up on the company, how it's been going for all this time. Has it grown? Has it peaked? Has it, as far as not the stock peaked, but the company itself. Has it reached like a plateau? Is the company already as successful as it's going to be? Or does it have a future in growing bigger? Like you look at a company like Tesla. Tesla's got so many different avenues that they're trying to branch into. Do you believe those avenues that they're trying to branch into, do you think they're realistic? Do you think they're stretching? When you look at a company like Apple, same thing. Apple's got their hands kind of, same thing with Virgin. When you see that companies, especially like tech companies, they got their hands in different areas and they're trying to grow in these different platforms, and they're like, okay, well, I can develop this over here. I can develop it over here. Is this development good for their company? Is it bad? Are they stretching themselves too thin? Do they have a viable product? Are they just trying to compete with the other guy, or they actually know what they're talking about? Now, this takes some more research, because what you're going to research is you're going to research the company and understand what they are, what they stand for, what they're trying to do, what their ultimate goal is, what their outcome is. Do you believe that this, I don't know, $2 million company will ever reach $1 billion? Do you believe that this 2 million company will ever reach 5 million? Do you believe that this $1 trillion company is finally tapped out? That's as high as they can go. People are getting tired of them. People are getting over it. They've had their fill. They're not interested in this company anymore. All these things matter. When it comes to the stock market, what you want to invest in is you want to know the company's viability. The company, not the stocks, the company. Now, the shares in the stock market are gauged and weighted based on consumer purchases and consumer sales. So as the consumer, me and you, as we buy, that price goes up. As we sell, that price goes down. So what's happening in the economy? And here's one that I promise you, it's something that I frequently advise against taking perspective from, but it's something to observe on a surface level, like strictly surface, okay? And that's media and social media. Okay, so media and social media come into play one way. They affect the consumer. People buy and sell things all the time based on what they read on Facebook. People buy and sell things all the time because they heard what Bezos did. They read an article about Musk, and so they're selling off their shares. They read an article about, they read another article about Musk, so they're buying shares. They read something else about this company, this person, that person. They read something, it's kind of scandalous, so they're getting out of the company. Or they read something and they say, oh, that's kind of interesting. So they buy into the company. So them buying into the company or selling out of the company doesn't necessarily give the company merit. It doesn't really evaluate the company. It evaluates the stock. So that's why I say that the stock market is for long term. That's why it's investing, not trading. Now, there are ways that you can trade on stocks. Lots of people do. I am never a big fan of trading stocks. I am an investor. I always have been. Because I see the stock market and I see the potential. I see the huge upside of growing one's net worth, getting to a level of wealth and sustainability, and seeing those dividends roll in. I mean, you're looking at someone like Buffett. Like I said, he's a great example because everybody knows him and everybody's heard of him, and most people don't question that he's a great trader. Buffett's getting a multi-million-dollar payout every year. Now, could you live on $2 million a year? Of course you could. Would you be satisfied and happy with $2 million a year? Absolutely. He's getting multi-million dollars a year just from dividends. Just from dividends. That has nothing to do with his net worth that's continuing to rise every year. So he invested in oil, he invested in Coke, he's invested in all these Chevron, he's invested in all these different things, right? And while he's invested in all these different things, all these different companies, yes, granted, he's got millions and millions and millions invested. He's got billions invested. But it wasn't billions of his dollars that he invested. See, that's what some people miss. I saw a thing recently on TikTok, and somebody was like, did you know how much Buffett gets in dividends every year? And somebody's quick response, it was actually a tweet that somebody had captured the tweet, screenshotted it, and put it in a TikTok. But somebody responded Yeah, but he's got billions invested. Well, yeah, but he never invested billions. Not of his own dollars. He's got billions invested now, but it was never his own dollars. It started with a single investment at 11 years old. And then when that money grew, he diversified and invested in something else. And when that money grew, he invested in something else. And when that money grew, he invested in something else. And then he's got this platform where he's got here, 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 here. And as these continue to grow, he invests in other things. And then as these continue to grow, he invests in other things. And then when he gets dividend payouts, he says, I don't need those dividends. I'm going to invest them in other things. And so then he's got this portfolio that's just rising and rising and rising. And that could be you. He didn't take $1 billion and invest $1 billion so that way he could get millions of dollars in return. No, he took a small piece. He took, I think, if I remember the story correctly, I believe he took what he earned mowing yards or something like that. I don't know. It was something old school, something simple. He started earning a little money and he took it and bought his first stock just because he thought it was cool. He was like, I want to buy a stock. So he bought a stock. And when that stock grew, he bought another one. And then he bought another one. And then he bought another one. This is how it works. That's why I say it's long-term investing. It is not meant for the weak. It is not meant for the weary. It is not meant for those who are going to continue to watch the market, see it fluctuate and panic either. You've got to be willing to watch the market fluctuate. And when it dips, do you believe in the company? If you believe in the company, it dipping doesn't hurt you. It dipping helps you. It dipped, like I say it all the time. It's one of my favorite things. Blue light special, man. It's like old school Kmart, baby. When they drop the price, you see that dip, you watch the curve, you watch the market, and when it starts leveling off and it starts to be, it's time to buy. Buy. Buy then. Buy it while it's hot. Buy it while it's cheap. Buy it while everyone's selling. Because why? Is the company still viable? If it is, then everybody's selling for the wrong reason. Don't base your future and don't gamble your money based on what somebody else is doing. Don't gamble your money based on what you read on Facebook. Now, like I said, Facebook and the media, social media and mainstream media, they come into play when you can look at social media, you look at headlines in the news. Don't let it affect your purchase power. Don't let it affect your selling, but allow it to give you insight into why others are selling or why others are buying. Well, I saw Musk in the headlines again. Why is he in the headlines? Well, I didn't really read it. Go back. Google. You have a smartphone. We all do. It's right at the tip of your fingers. So Google. Say, Elon Musk, news. Oh, he was in the news because he was, preparing the next rocket. Oh, okay. Is that going to affect Tesla? No, not really. But did it affect the Tesla stock? Might have. Should it have? No. But will it? Possibly. Why? Because you can look at that and somebody else would be like, oh my God, see, he's a genius. I should buy more Tesla. He's a genius, so you should buy more Tesla. Okay, can I say they're wrong? No. But can I say they're right? No. So they didn't do wrong, but they didn't do right. But if you go and you look at the stock market and you're like, oh, it just jumped. It jumped 2 days after he was in the headlines for the next rocket. So that must mean Tesla's doing great. So I should buy more, right? No. You never buy on the upswing, baby. If you're buying while it's up, you're buying in the wrong spot. You missed your window. Now, if you see it tanking, this happened a few years back. Mr. Elon Musk. I use Elon a lot because Elon's in the news a lot. And there's few people who don't know him. Very few people who don't know him. A lot of people like him. A lot of people hate him. But few don't know him. Everybody knows him. Okay, so that's why he's a great example. And see, I can reference news articles that you've probably read. Okay, so there was an article that came out after he was on the Joe Rogan Experience. Sad thing is too many people didn't actually watch the podcast. with Joe Rogan and Musk. I mean, a lot of people did. A lot of people who, tune into Rogan every week. But there's millions and billions of people who never do. So they didn't actually tune into that. And a lot of those people are shareholders. So when they saw a clip that was on Reels on Instagram, then they saw it on TikTok, they saw it on Twitter. It was trending across social media. Why was it trending? Well, one, Joe Rogan's popular. Why shouldn't it be trending? Two, it was Elon Musk. Elon Musk is definitely ratings. Doesn't care what platform you're on. He's ratings. Don't care if you like him or don't like him. He's ratings, period. Third, it was something scandalous. He lit up a joint. To a lot of people, that's not a big deal. What does it matter? It's just a joint. To some people, how could he? How could he do that? He's like a CEO of this big corporation. We should be trusting him to be smart, be wise, make good decisions, and he's smoking reefer? Once again, as I said, they didn't actually watch the podcast. So, what happened the next day? Tesla stock dropped 3 points. 3 points doesn't sound like a lot, but 3 points is a lot of money. 3 points is especially a lot of money if you got hundreds, thousands, or tens of thousands invested into the company. But people sold off stock. That did not affect Tesla at all. Tesla didn't blink. Tesla was not affected by him smoking. Tesla was also not affected by the stock drop. But the stock dropped because people were like, can't believe he's doing this. I don't trust him. I don't trust him with my money. And they sold off the shares. Can I say they're wrong? I'll say this, they're not right. But if you don't feel confident where your money's at and you've made a profit, move your money. But for that many people to do it at once, I can say that they're not right. Can't say they're wrong because they're not really wrong. But is that the way to handle your money? Tesla has a board for a reason. Tesla has a board of advisors for a reason. Every decision at Tesla is not Elon Musk's, even though he thinks it is. He never understands that he's had conflicts before because he doesn't understand why every decision is not his own. It's because he has a board. Because he took his company public and now he has a board. He has a board of directors and advisors that handle day-to-day operations. Now, he absolutely has influence over a lot of the things that happens in the company, but he does not have 100% control. Okay, so the thing I want you to take away from this is, as I mentioned, most people didn't watch that podcast. Or a lot of people didn't watch it. And obviously, most of the people who actually sold their stock didn't watch it. If you go back and you actually watch the episode with Rogan and Musk, Rogan was asking him if he ever had done drugs before, and he said, never done drugs before. I don't know who had it, but somebody had a joint, and they handed him a joint and a lighter, and he was like, well, I mean, I guess why not? I should try it, right? And he tried, he coughed, and Rogan started laughing and was like, dude, like, you really never done this ever? And he's like, no, not even when you were a teenager? No. He's like, as you can see, I don't know how to do this. He had no idea even how to smoke because he'd never smoked before. But people didn't watch the whole thing and took a soundbite that they saw on social media. And they took that social media. I think it was even covered in mainstream media. Somebody mentioned it. I don't remember what channel, but I believe I saw it on one of the channels. But they took this and ran with it and said, this is the reason that I don't trust him. I don't trust him with my money. I'm selling my stock. You've got a lot of variables to consider when you're looking at the stock market. You've got a lot of things to consider. What's going to fluctuate that value? The valuation of the company is the company. The valuation of a share is not the company. Don't forget that. I think I'm going to leave you with that. Today. We're going to dive more into this. I want to talk more about understanding the stock market. And I want to talk more about Forex and how you can develop these skills and, and understanding crypto. Be sure you stay tuned in because, like I said, we're going to dive into a lot more details. We're going to get to learn and know things together. Please leave your comments below if you've got more information you'd like to, there's something you'd like me to talk about, or there's something you'd like to add some details to that maybe I didn't mention. We've got lots of growing to do. We've got lots of money to make. We've got dreams to fulfill and so much that we're going to do together. So I hope y'all are enjoying this. I hope you're learning a lot. I hope you're taking some things away that you can marinate on throughout the days and weeks. And like I said, we're gonna keep learning. We're gonna keep growing. We're gonna make some money and build a better and brighter future for us and for our families. So with that being said, y'all have a most excellent day. Y'all be blessed, and let's get cocky and go get it done. Go crack a book, learn you something, or open up your iPad or your smartphone and get educated that way, but not from social media, from a reliable, credible source. There's lots of them out there. All right, till next time, it's your boy, CoreyB, and I'm out.